Hello and welcome back. Today I'd like to talk about a really important topic in the corporate finance portion of the curriculum, which is called leverage. So in general, leverage refers to the use of fixed costs in a given cost structure. Now there are two types of fixed costs that we need to be concerned with. One is fixed operating costs, such as depreciation, R&D expense, SG&A, etc. These expenses create what's known as operating leverage. The other kind of fixed costs are financial fixed costs, including interest expense. Financial fixed costs create financial leverage. Before we dive into the specific problem, I'd like to spend a couple of minutes on this graphic to help you develop an intuitive understanding of operating leverage and financial leverage. Now, key to this topic is having a clear understanding of the general layout of an income statement. So starting from the top, revenues or sales or total corporate turnover refers to the amounts reported from the sale of goods and services in the normal course of business. Gross profit is the amount that remains after the direct costs of producing a product or service are subtracted from revenue. So the cost of sales here is a variable cost. Fixed costs are expenses that are the same regardless of the production and sales of the company. And as indicated in the diagram, fixed operating costs refer to items such as R&D, SG&A, and depreciation. When we subtract the fixed operating costs, then we're left with operating profit or EBIT, earnings before interest and taxes. Operating leverage refers to the relationship between the gross profit line and the EBIT line. So the degree of operating leverage or DOL is the percentage change in a firm's operating profit or EBIT resulting from a 1% change in sales. So the thing to note here is that the degree of operating leverage is for a particular level of sales, and the DOL itself will be different at different levels of sales. So in summary here, when we say a DOL at 5,000 units equals 5, what it really means is that a 1% change in sales from the 5,000 unit sales position causes a 5% change in EBIT. So with that, let's look at an example that will help illuminate this concept. So quickly reading this question, we're given the total planned production volume, the market price of the sold product, the fixed operating costs, and the variable costs per unit. Now the options refer to operating leverage and break-even quantities, etc. So let's think about what's presented here. The market price of our output is less than the variable cost. What this means is that for every widget produced, we're actually losing money. And no amount of widgets produced will generate enough profits to cover our fixed operating costs. So with that observation, we should immediately scan the options to see if we can answer this question without any calculation whatsoever. The first option states that the company can eliminate operating losses by shutting down production. Now, what will happen when you shut down production is that your variable operating costs will go to zero. However, the fixed operating costs will continue to exist. So A is incorrect. B, there is no break-even quantity of sales. This seems correct. There is no quantity of output which will allow Widgets Inc. to break even. So B is in fact the correct answer. Now just for the heck of it, let's look at what the degree of operating leverage at 200,000 widgets would be. So let's look at C. So the degree of operating leverage is gross profit divided by EBIT. Our gross profit would be quantity multiplied by price minus variable costs. So that would be 200,000 into 15 cents. In addition, we have fixed operating costs of $250,000. So that would leave our EBIT position at minus 280,000. So our degree of operating leverage is minus 30,000 over minus 280,000. And of course, this is plus 0.11. So DOL is in fact a positive number and C is incorrect. I hope that helped clarify degree of operating leverage. Next time, we'll look at the degree of financial leverage and degree of total leverage. Good luck with your prep as always, and I'll see you all next time.